A big question we get asked all the time at Stock Hours has to do with position sizing. So today I'm going to help make that process a little bit easier. What's up, you guys? It's Keith from Stock Hours. Today I'm going to be helping you guys figure out what position sizing should you be using as a beginner day trader. Let's jump onto the computer. All right, you guys. So we are going to go over my sizing rule that I like to call the 3-strike sizing rule. So what your goal with this is, and this is very helpful for small accounts. This is how I personally grew my account from around $2,000 to well above the PDT mark and more over the years. So your goal is to be able to take the same exact trade with the same exact size a minimum of 3 times. So what you're going to want to do for this is here's a couple rules to follow. You want to plan your trades and only follow your plan. If you have a trade idea that comes up and it's not on your plan, just skip it. And you're going to want to have a max stop loss of 10%. So we always say 10% stop loss. If we're specifying a stop loss on a trade, nor or whoever is taking the trade will generally say 10% stop loss. What a lot of you guys end up doing is you let your trade get to minus 10% and then you give it a little bit more room. So that's not what we're talking about. We're talking about a max stop loss of 10%. If you can, you want to cut your losses beforehand if you're seeing red flags. So that minus 10% is the little bit of room that we're giving it. We're not getting it to 10% and then giving it some room. We're getting it out completely at 10% if we see that. Our little bit of room beforehand to see what the stock is doing is the buffer between 0% and minus 10%. So, like I said, cut your losses beforehand if you're seeing red flags. And then the last thing for this is 3 strikes for the day and you're done, which means if you're taking 3 losing trades in a day, you just have to cut it there. Because for me personally, and for a lot of others, if you take 3 red trades for the day, you're already in a bad mental state and you're not going to be making very smart decisions from then. So we're going to go into more precise numbers of what I'm talking about. So for each trade you have planned, you want to divide your account balance by that amount and then divide that by 3. And we're going to be using a $2,000 account for each of these following examples. So if you have 1 planned trade, you would divide that 2,000 divided by your 1 planned trade, which is still 2,000. Just figured I would explain that. And then you're going to want to divide that by 3. So that would mean you have a $660 max position size per trade that you're taking on this one setup. If you have 2 planned trades, you're going to take that $2,000, that's your account balance, and you're going to want to divide that by the 2 setups you have, the 2 separate setups you have, and then you're going to have a total of $1,000 limit per setup, which means you're going to take that $1,000 and divide that by the 3 trades that you're going to be willing to take on each setup. That will give you a $333 max position size. And then if you have 3 planned trades, you take that $2,000 account balance divided by those 3 separate setups, and then you'll have a $660 total limit per setup. So then you'll take that $660, divide that by 3 trades per setup, which means you will have a $220 max position size per trade. Now we're going to get into the math behind this sizing. I'm going to be using 1 planned trade as an example to demonstrate the P&L on a 1-to-2 risk to reward ratio. We generally shoot for minimum of 1-to-2. Our trades are usually 1-to-3 or more, but we're going to be using this 1-to-2 risk to reward ratio. I'm also going to be using our max stop loss to demonstrate. So if you have 1 strike, that means you take your $660 position size on your 1 planned trade, right? You're going to take your $660 max position size. So you take that $660 position size with a 10% stop loss, which means you're going to be losing $66. And then you take your next trade whenever this trade sets back up again and gives you a good spot to re-enter. You'll take that next trade with the same $660 position size, and your 1-to-2 risk to reward ratio means you're going to be aiming for around a 20% profit, and your profit on that is going to be $132. So your total is a $66 profit. So even though you started the day down $66, now you're ending the day up $66 on this trade. If that's with a one strike. Generally, I will not see myself get stopped out on a trade more than once in a day. So on the occasions that I do, it's very, very rare that we get stopped out on the same setup more than once. Obviously, you're going to have to factor in your average win to loss ratio on this as well. But for me personally, I will not see myself get stopped out more than once on a setup per day. And that's if I even get stopped out at all. And then you have your two strikes here. All right. You have your $660 first trade. You hit your 10% stop loss. That's minus $66. You have your $660 position, hit the 10% stop loss again. Now you're down another $66. And then you have your $660 profit here, your $660 position with a 20% profit, which once again is your 1 to 2 risk to reward ratio. Now you have $132 profit on that trade. So your total for the day is break even. That's for two strikes. Now, the amount of times that I have hit my stop loss 3 times on the same setup in one day has been, I could probably count them on one hand. So this is, once again, factoring in basically the worst case scenario, you hit your max stop loss every single time you stop out, and you're stopping out multiple times in a day on the same setup, which, like I said, is very rare, because when we're entering these setups again, we are looking for the missing puzzle piece that we didn't have the first time. So with that, it's a very, very low probability that you're going to be stopping out more than twice on one single setup in a day. So this is worst case scenario. You hit your stop loss 3 times with the same position size in one day. You end with a $198 loss. So once again, you're going to have to factor in your own personal win to loss ratio and plug these numbers in. I guarantee you, you will see the majority of the days 0 strikes, 1 strike, or 2 strikes. So like I said, this is worst case scenario on all 3 of these examples here, and more likely than not, you're going to be in the 0 to 1 strike range for 75% of the days. But this 3 strike rule will really help you out in the long run if you just follow these examples. So like I said, this was a $2,000 account that was being used as the example. You're going to have to plug in your own numbers and figure out the sizing from there. But this 3 strike rule has helped me a ton throughout my trading, and it should help you guys as well. So if that helps out with your guys' sizing, definitely make sure to drop a comment. If you have any questions, feel free to DM me. Make sure you like, comment, and subscribe on this video, and turn on your post notifications. If you guys are interested in joining Stock Hours to learn more, then definitely DM me, DM somebody from Stock Hours, or just click the link in the description. So I appreciate you guys watching. I hope you have a great rest of your week. Peace.